What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online. As usual, today we've got another Mogul property. This might seem like it's turning into the all Mogul all the time channel. It's not my intention. They just are putting out properties pretty regularly. They're selling out very quickly, so I feel like I have to jump on them as soon as they come out. And as soon as there's like interesting stuff to talk about with some of the other platforms, I'll do that. I do have one I'm working on about Lofty, but it is, I get sick of picking on them, so sometimes I hesitate to put out some of the stuff there. But anyway, what is this property? The Harden. It is a pad split in Tempe, Arizona, 9 bedrooms, 3.5 bathrooms. This is, I believe, the same seller that was for the Fitzgerald that we just saw a couple of days ago. And it's the same deal, right? They're buying a home. It's a fully renovated home. The seller has agreed to add the additional bedrooms and furnish the property and list it on Padsplit in the meantime, between now and closing. I again didn't notice those terms in the contract. I must just be missing them. I don't know. Or they have some other, they have the agreement written somewhere else. They have an amendment, an addendum. I'm not sure, because I would have expected to see it in this additional terms, and it's not there. So I am curious where that exists. I'm not sure. But this, this is all that we were provided. I don't think they're just making it up. So my guess is, I don't know, maybe they have some agreement, especially where they're doing multiple properties with them. Maybe it's just a separate written agreement, but we didn't get to see it. I would like to see it, so that's, I don't love that. But anyway, year one yield 8.1%, average yield 11.8, and levered IRR 12.1. This is another one where I believe they're just trying to be conservative because they're, making projections in a vacuum, right? They don't have a year of operations like they normally do. And so this is the second one of those, and it's also, relatively low yield compared to a lot that we've seen from them, especially from the pad splits. I think part of it too might just be because of pricing in this area. Let's talk a little. Well, let's see if there's anything else I want to say about this. It was listed on the market. They bought it $28,000, and I actually think it's $27,900, but below the list price, that much below. Is that right? Yeah, but right around $28,000 below the list price. In addition to that, the seller agreeing to pay for the bedroom conversions and fully furnish the property and launch it on Padsplit's platform prior to closing. All that is fantastic. And so I think that they're capturing a lot of value there, in addition to a discount to the, the asking price anyway, which we're going to talk about valuation a little bit, but let's talk about Tempe, Arizona. I think that I've done a video on this. We're right by Mesa, where we've looked at another property over there. It's a relatively big city. I mean, it's a small city by, the grand scheme of things, but it's over 100,000 people, right? Which is the minimum city size that I really like if it was going to be a city just all by itself. But it's in the Phoenix metropolitan area. But you can see, really strong growth trend. Between 2000 and 2010, it slowed way down, but then it's picked up quite a bit, between 2010 and 2020. It's in, what is it? What is the county? Is it Maricopa County? Which, you can see this county, just unbelievably strong growth. And then also, in the Phoenix metropolitan statistical area, and again, really strong population growth. So, I'd love to see that. This is a market that I like a lot. I'd like to buy more stuff there. And so, hopeful digging into this that we'll see, stuff that will make me want to do that. So, this is another one they're calling Core Plus. Where they're starting from scratch with a new business model. I find that a little troublesome, right? I mean, it's a vacant property that they're buying that they're going to fill up, and I guess okay, well, no, by the time they buy it, maybe it'll have some rooms rented, but there's really not an in-place income stream that we're buying, and so I don't know. Since they added these core plus value add designations, I haven't really loved what they've picked. Obviously their yields on correspond to these as well, and so sometimes it just feels like they're like, well, this is a lower yield property, so let's call it core plus or let's call it core, versus some of theirs that are higher. I mean, I don't know. I would be curious. I'd really love it if they gave a little insight into why this is a core plus versus some of the other pad splits on their platform that were operating already. Like, is that where the plus is? Anyway, let's see. There's, using 75% LTV. They still have this 6.75 interest only loan is what they're saying. Based on their previous webinar or, comments, I think they're probably getting it, going to close below that, but we'll see. I'm going to look at all these comps here. So let's see if we need to talk about any of that. Yeah, the total raise, 353,000, right? Purchase price 725. I think we already talked about that. Let's jump into, I'm going to do the always shut off the refinance, right? Because they're, and this is a 75% LTV again, but yeah, they're assuming we can refinance. If we can't, okay, drops it to 11 and 11 for averages. Not the end of the world. I really would like to see, a little bit better returns here. But I think, I actually have quite a few friends in this market, and I think it's just really tough to buy in this market with great yields because of how fast it appreciates there. And that's one thing I forgot to pull that up is the Zillow home price trends for this zip code. Let's see. Yep, I can't type without talking. Oh, 1 year down 3.8%. And they're predicting down 0.1%. This is very similar to the shape of this chart that we saw on the Fitzgerald as well, although this looks like we've gotten a little bit more flattening here. Honestly, I think what happens from this point forward is going to have more to do with interest rates than anything else that we see. So I don't know. I'm not sure. I expect over the hold period that we'll get good appreciation in this market, but I don't know that. That's just my expectation because of what I know about the market, because of the population trends and all that. Let's see what they're projecting though. They're just saying 3%. Maybe that's all it's going to be, and then we're not getting amazing. This is not going to be an amazing IRR. It's not terrible, right? Like an average yield of 11% over the hold period and a year one yield of 8%. It's not easy to find deals that even hit those numbers in a lot of markets. So I don't know. Let's jump into the easy stuff first. Going to go to the flood map. This is, again, this whole area is shaded X. So it's just, we saw this on the Fitzgerald as well. I think you're just going to have a little bit more flood risk there than I'm used to taking, but it appears to be basically the whole market from when I've really spent some time dragging this around. It's going to take a while to load, but you can see, like, it's just all of it, right? So, so there's that, and as I've talked about quite a bit before, when I'm buying the fractional stuff, I've been okay with this shaded X. I don't really want to be worse than that. But that's, it's a risk you have to think about. Are you comfortable with that or not? Before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online, Mogul being one of them. Some of those links give you free money. Some of them say they give you free money and they don't really. But Mogul is one that I have actually gotten rewards from for, sending the links and using the link when I bought my first property on there. You want to do your own due diligence on any of those platforms, or I put them there for your convenience. Some of them, even though I own properties on there, I wouldn't recommend. And so I'm never trying to tell you, you should or shouldn't do it. You want to do your own due diligence on all those platforms and on any of the properties you see me talk about. Also in the description of this video, I have a link set up to the Discord where we have right around 200 investors now in there, several of them on a regular basis talking about all different fractional real estate platforms. We have a lot of good discussions every time there's a new Mogul property, a lot of discussions about what's going on Lofty. Those are the two most active ones, but ground floor, a little bit of arrived. So feel free to jump in there and join those discussions. That's in the description of this video. You'll see that link. All right, back to this. So yeah, you just have to figure out, are you comfortable with that shaded X flood risk? I mean, obviously, everyone in this area is, right? So it's, and I believe the Mogul guys understand what they need to do as far as insurance for that, so that's important. And I won't have to be the one dealing with the flood insurance claim, which is why I haven't been letting that stop me. I still don't want the AEs or the really higher flood risk areas, but I'm okay. I've been okay with that. Looking at the crime map, this one's quite a bit better than what we saw yesterday. Although this is only, I think, just a couple of days of reported crimes, like 3 days, maybe 2 or 3 days. But you can see, you've got some assaults. I didn't see any shootings where those, we saw some of those in the other ones. This is, and if I really zoom in, there wasn't anything in our immediate neighborhood. So that was good to see. While we've got this, you can see, we've got the nearby bus stops. You also have a rail line nearby, and I don't know what this is access to. But this the Arizona State University campus right here. So you'll see, being close to that campus is one of the main selling points of this property. Oh, I'm going to move that down there. I don't even think you see these little bubbles that I move around when I'm recording, but it's, have to get that out of the way. Anyway, so, I think that proximity to the rail, how close we are to the campus, or no, this is not the rail. This is the bus over here. This other spot, there's a rail, and I don't even know where that goes. I mean, it might not even be that useful. It'd be something if you're thinking about investing a lot in this, you might want to look at that. But also, seeing how close we are. Is it a rail? Maybe it's a different bus. It looked like a rail on the other map. But anyway, not a terrible crime map as far as I'm concerned for this type of business model, right? We've seen where the pad splits are often in areas that are a little bit rougher than where I'd want to put different types of investment properties. And then, this is the neighborhood scout heat map, and we are in this area. I think this area right here, which is, it looks like, it's not the darkest, most dangerous part of Tempe, but it looks like maybe it's probably the second most, as far as the shading goes. One of the things I want to point out, when it's doing this, it is just relative to this area, right? So every time you have one of these maps, you're going to have some parts that's the safest and some parts that are the most dangerous. It doesn't mean that the blue or the dark blue here is the same level of dangerous as the dark blue in another city when we see that. I think some people are confused about that based on some of the discussions I've had. So, yes, it's not one of the safest parts of Tempe. It's actually close to one of the most dangerous parts of Tempe, but at the same time, that doesn't mean that it is such a dangerous area, right? That's one of the things. Total crime index, okay. Well, actually, that's terrible, right? Well, 4 or 100 is the safest. Oh, so Tempe is actually, what? Okay, it's actually really high crime. I didn't think that was true, but so I'm obviously wrong about that. I don't know. Definitely something that you want to look into. I'm very surprised by that. I'm curious if it's like really concentrated in the most dangerous areas or not. Or if my impression of this is just completely wrong. So maybe that's something you're going to want to dig into a little bit more. I probably will before I pull the trigger on this one. Now I just want to talk about the valuation a little bit. This is one where, if you've watched many of my videos about Mogul properties, if I don't buy one of their properties, it's most likely because I have an issue with the valuation. I think that we're paying too much. Now this one, we did get a discount to what it was listed for. List price doesn't always have a strong correlation to value, but it's at least some indication, right? At least somebody put it on the, they found an agent willing to put it on the market for that price. We negotiated it down. In addition to that, we got them to do the conversion for us and to furnish it. So I think there's a lot of value. This is another spot where they have comps that seem super, or at least a little bit questionable to me, right? We're going to put these on the map. This is our property here. And then this is, comp 1, 2, and 3. We're pretty far outside of our little neighborhood here. But this time when I looked for my own comps, and you can see, okay, so let's see. It's just so this is clear. This is Broadway here, right? And so, what am I doing? So, and see, this is Broadway here. So my little area that I'm using is much narrower. Basically, this is just this zip code. Those comps that they're picking up are like down here. So in this area, and actually one pulled up here, even though I'm trying to use this zip code. When I narrowed by the size of the home, tried to pick ones that sold within the last year, close beds and baths, and I actually dropped it down to 4 bedrooms and 3 baths. You can see there's very few sales, right? And the price per square foot were really all over the place. We had $228, $255, $289, and $414. Now this $414 home looks significantly different than the others. So I think, that's an outlier, and I wouldn't want to really use that. But we are well below that. I think let's do a little bit of math and keep doing that. Okay. Sorry about that. We're just going to take the square footage divided by the purchase price, or the purchase price divided by the square footage, and see, okay, what are we actually paying? Divided by 2247. Okay, 322, right? So of the comps that I found, we're well above the average of them, or well above the median anyway, right? Like we're somewhere between these two would be our median. But we're still significantly below the highest one, right? And because we're getting the extra value of them cutting up the rooms for us and putting the beds and baths in, I don't hate this valuation. I don't love it. And when I look at these comps that they used, let's see. I think I'm not doing them in the right order here. Okay, yeah. First comp, it is, okay. I'm having a lot of problems with my touching. Like the homes themselves, they just look like, most of them look like a little bit of a step up from our home, on the outside, the way it looks, the renovation itself. Maybe not. Maybe it's close, right? This one I think is pretty close. Let's see. This one I think looks a little bit higher end than ours. On the outside too, just a little bit. Not really. Actually, maybe not. Maybe this could almost have been done by the same people. I wonder if that's where they're getting comps. If they were like, hey, these are ours. Because this does look a lot. Very similar renovation. But this one really struck me as, okay, that seems like not exactly the same. Like, look at that. That looks ridiculous. I don't know. And this is the one, well, this was 720. Yeah, so these were all their comps, right? I don't know. They moved kind of far out of the way. But the size-wise, they're right on the money with that. And then, like I said, I think at least one of these renovations strikes me as being, and this is obviously, taste is somewhat subjective. maybe it's not. Maybe it's the same level. Um, the staging I think helps also too. So of those other ones, I don't know if it's actually staging or if people just live there. It looks more like staging to me, but who knows? Maybe not. Yeah, I don't know what's happening right there. So this isn't the most egregious set of comps that we've seen from them, but it isn't. I don't love them either, right? I'd like to be, uh, but I couldn't find better ones, and I think my thing's frozen here. Let me just pause that. I haven't had this many problems with my computer in a while, but yeah, so I couldn't find uh very many close comps anyway, right? And if I actually do in the last 6 months, I came up with zero. And although I don't think theirs are much more recent, they had one in November, but they're also going pretty far back with March and May. So it seems less like they're reaching than for some of the others, but I don't love the comps. So yeah, that's all I'm going to say about that. I'm going to quit repeating myself and then move on to. We already talked about. Yeah. Oh, one thing that we didn't do is zoom in on the street view like we normally do. I did this before we got on the camera or on the recording, but so I showed you, we are close to the bus stop. It looks like there's significant parking behind it, but let me try to grab the little guy and see if we can walk back there. Yeah, see, I don't think we can, but let's look. Can you drive back there to get to the parking behind? I don't know the answer to that. Ooh, that's a lot of water. All right, let's go back up here. Oh, come on. Sorry if this is like watching your grandpa use the computer today. I don't know why I'm having so many problems. Okay, let's see. And here we go. The other thing that we're always concerned with is parking. And I actually think we're really good here because this seems like if we want to, we can, I know this is all just like crushed rock or whatever, but I think you can park on all of this. I don't know what they're doing here with this little green patch. If this is like just if you have a dog or something, I don't know if that's what they thought about when they were renovating it, but obviously, for the pad splits, we don't let you have an animal in the single occupancy rooms. I actually had never really thought about that before, like if they can have if they limit having like service dogs or not. I have no idea. Something I need to ask at some point. But yeah, so I think that's the idea here. Like, okay, let's have a little green patch just in case we have a dog. But if you see, like, okay, we got a ton of parking here, right? It just looks like a curb that you can drive over. Although I'm not 100% on that. But other than that, it's not. We don't have. Geez, what is going on here? Just getting. I must have like something sticky on my touchpad, and it's giving me problems. But yeah, when I looked around the neighborhood, I didn't see any I didn't see a lot of graffiti, didn't see broken down cars, broken windows, like the things that you'd see that would make you worry. Obviously we already looked at the crime map. I thought the neighborhood in general looked pretty good. Like I said, it does look like, there's not a lot of street parking, but it does look like there should be access to the back. Oh, let me show you that picture. And so, we have this in the front, but there's another picture that led me to believe, yeah, I think this is the back. And so I think that there's even more parking. Now, maybe, though, I think that's a gate there. But, obviously it would be great to have additional pictures so that we could be sure of the parking whenever we're looking at pad splits, right? Because it's going to be one of the biggest things that we worry about. Yeah, if you zoom in there, this to me looks like a gate that opens, so maybe you can park in the back too. Not 100% sure on that, but that seems like that would open up to where the alley is. Maybe that's really only to put your trash out there. I don't know. But between being walking distance to campus, having the bus and the rail nearby, and then having all this parking in the front, I think we're probably pretty good here. Let's see, there was nothing I really wanted to talk about in that agreement. Oh, other than, they do typically, they have the appraisal contingency, like always talked about. I don't want to beat that to death, but it is something that we have seen them close even when the property didn't appraise, because they were able to get a little bit more financing and still make the deal. The numbers work out just as well, which is why I really am now focused on, okay, how does that valuation look? And then the only other thing I wanted to talk about is the income projections. I've been using the Padsplit tool quite a bit, and it's so there was quite a bit of discussion in the Discord. Is this rental income number? Is this post Padsplit vacancy and fees? I believe that it is. I think this is when we look at this view breakdown in here, that we're taking this effective gross income and then also subtracting your total platform fees. I think so. In order for me to get a number to match up with theirs, what I had to do was change the vacancy to about 5%. Now, I think it's also possible that what they did is bump these numbers up a little bit instead. I'm not sure. That would be one of the things that would be interesting to see. Because the reason I've been looking at this a little bit more closely on this one and the last property is because they don't have the historic numbers. So understanding how they came up with their projections is a lot more important to me on here. And it seems like, 5% seems like we had to get pretty, that was pretty low. I was surprised. But again, maybe they're bumping up the price and then not messing with the vacancy as much. I really don't know. It's, and it's something that I don't think there's not a way for us to be sure at the moment. Obviously you can reach out to them and ask them. I think probably on the next webinar, I'll ask just some general questions about that, and welcome everybody else to do that too, because they've been great about answering stuff. So this one, I'm kind of in the same boat as I was with yesterday's or a couple of days ago. I actually think I liked the valuation on that one a little bit better, even though it was much less certain. Because I liked, because it was a commercially zoned and it was 2 properties, and so it was actually just tougher to know, right? But this one, it's we have the difficulty because there's not a lot of great comps. The one that's in our zip code that is really significantly higher than this one just looks so much different, right? It was that house that screams like southwestern opulence or something. I don't know how you describe that architectural style, but just a higher end, a lot more character, right? And then other than that one, one of their comps also was a much nicer one. So, I'm not gonna beat that to death, but so I don't mind the valuation, but I don't love it. I'm not excited about the yield because it's on the lower end of what they have. I'm also worried about it because, this again, we haven't seen where they've bought properties that didn't have in-place income and then had to ramp them up. So we don't know how good they are at making those projections. Based on all my interactions with them, I assume they're actually pretty good at this. Because it is hard to always just find operating ones with in-place income. But I think part of what they're doing is they're being conservative, but it makes me, I'm not sure, right? And so, okay, I don't love the valuation. I'm not excited about the yield, right? It's not one of their best performers. I really like the market, and I'd like to be in this market. I don't have any other real issues with it. And so I just keep hoping that, okay, they're going to put one out that I'm just super excited about again, right? Because they have had several that I was like, oh, I'm scooping this up today. I don't know if this is just going to be our new normal, right? Are we just going to have these sort of lower yields, or have the really high yields, but we're sort of overpaying in my mind for them? I think it's possible that that's where we're stuck. Oh yeah, let's see. Did we have some better pictures here? This is, it is a nice renovation. I don't know if it's really fair to say, but it is, I think it isn't on quite the level of that one comp I was pointing out. Yeah, I don't know. I think I'm going to pass on this one again. Uh, I just really, I think having the money sitting in my Mogul account from that one cancel deal makes me even more just want to pull the trigger on something. And I'm starting to get to where my, where is it? It's on this other tab, where my, reward balance is really adding up. A lot of this is from the club reward. So if you're not part of the club, I'd suggest join the 400 club. That's the one I'm in. There's a lot of activity in that. So once you start, once you've bought into it, future people buying, you get rewards from that as well. And there's no, when I say bought in, you just have to join the club and then indicate that when you're investing in a property, that you want your rewards to be associated with that club. Yeah, it's been really good for me. So, I do want to just pull the trigger on something, but I don't know. I'm not there on this one. I think that, I'm going to need one that's either, I just want to be excited about it, because I already have 15 properties with them. And this is, I don't have a huge portion of my net worth in this at the moment, but I'm looking at it as an experiment. And I think at the moment I now have plenty to get a good sense of where this is going. And want to just see how that goes and be very picky about the ones that I'm picking from this point forward. Until I'm just decided, okay, I'm all in on this, and then I'll start maybe doing more. We also have the secondary market, coming out sometime next year. There's a lot of speculation in our little group about, how that's going to impact how quickly properties sell out, and are we going to be able to buy these at discounts and all sorts of things like that. So anyway, for this one, I think I'm going to pass for now. If you're going to buy this one, I'd like to hear about why. Are you just excited about the market? That's the one thing. I think over the next 10 years that I would be comfortable assuming a higher appreciation rate, right? That's what's making me think this might be a better deal than it looks like on the surface, and that's that's one of the things. Because I like the market so much, where I'm kind of on the fence, even though, yeah, I'm not so sure I agree with the valuation, and I would like to see a little bit higher average yield, but at least for now, I think I'm just going to stick with I'm just being a picky investor, and I'm going to wait for the next one and see how that is. But yeah, let me know what you think. Until next time, I'm just going to keep making mistakes so that you don't have to.